The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing out there? Happy Monday. And we got the markets off to an interesting little start here. Ran up overnight and decided to give all that back and falling back down just after they just broke the little highs there basically last Friday. So, and I just want to go over a little quick market recap for you. We got the S&P down 5 points. We got the Russell down 6.6. The NASDAQ down 2. And the Dow down 69 points. We got the CL up 32 cents on the oil there. And over on gold, we're looking up, or actually down, $2.40. And over on the currencies, a little bit of movement. So pound dollar basically flat up 5 pips. Aussie dollar, the big mover, down 69 pips. And euro dollar down 48 pips. Basically the same as the U.S. franc down 42 pips on the day there. We also got corn is pulling back off those highs down at 9.25, and we got soybeans actually down 36. So just checking those charts out and seeing what all is going on. Also, let's go ahead and, like I said, pull up the charts, look at the soybeans, and you can see they've just been sort of trickling down ever since last trade day there, last Friday. And moving down, and basically made the big move in the morning, sort of been choppy ever since. And over on corn, we got the same thing going on. They started trickling down and just kept going down, and they actually did a little bit of a pullback here most recently. So just keeping an eye on the market. And quiet day, quiet summer day. That's your normal summer trading. So be ready, be expecting that in your trade. Expect a little bit of choppiness there. Not so much the volatility side, unless some big news comes out of somewhere for something. But so far, no big news. U.S. didn't really have any reports today. Tomorrow, we are going to have some reports here. We're going to have core retail sales, PPI, and retail sales. So those are going to be the numbers you're going to keep your eye on. And those are coming out again at 7:30 Central, 8:30 Eastern Time. And I'm just sort of seeing how everything's coming up. And, with retail sales going on, of course, we got all the earnings this week. A couple have already happened, but, you got Home Depot and Target and Walmart. So those sort of the last tail end of the earnings season here. So it's all about retail sales going on this week in the economic indicators and even in the earnings forecast. So we'll have to see how all that comes out and comes together. And then later on Wednesday, we're going to have core CPI. That's going to be the big number everybody's going to be looking at. There are some other numbers coming out on Wednesday, but that's the main one that ought to shape the market. And then on Thursday, you got your every Thursday unemployment claims coming out, projecting around right now 365,000 unemployment claims. We got building permits, and we also got housing starts at the same time. Housing starts not near as big as building permits, but nonetheless, all coming out at the same time. Understand that whenever two big indicators like building permits and unemployment claims come out at the same time, then you can definitely get choppiness if they don't line up. So be aware of that. Just because you see a bad unemployment number, if they see a great building permits number, vice versa, one can sort of stunt the other's movement, but they can add to a ferocious move if they both line up and they both are basically negative or both positive. And then at 9 a.m., we're going to have the Philly Fed Manufacturing Index. And on Friday, we're going to wrap it up with the preliminary University of Michigan consumer sentiment report. And we're just basically going to be seeing how everybody's feeling about everything. So, we still got the same old as far as the European currencies are going right now, and the EU. No big news. Everybody, basically, the big thing they're watching is just they're watching those Spanish yields to see how they're coming out. And, we'll basically just have to keep an eye on those from, day to day as they have, new auctions and see if, that has a big impact on the market or not. So if they start, broaching that 7% on a consistent basis, then that could cause a ongoing downturn. And the markets overall really just at a big support level, resistance level, actually. And if you go back and we want to pull it up and look at always make sure, even on your intraday trades, make sure you're looking at the market, make sure you're looking at the intraday charts. And you can see right here that we're basically at the same place we were in March. And there was a little bit of a dip down, a little bump up, and that's when the market decided to do its downturn. And if we pull back and we want to look a little further back, you can even go back to weeklies or monthlies, whatever you want to look at there. And you can see we're just above the highs on the futures. One of the best places to keep it consistent is pull over and look at the S&P. On the S&P, you can see we have broken that resistance level from 2010, but we haven't necessarily broke it, with a lot of volume. And of course, being summertime, you wouldn't expect to break it with a whole lot of volume. So getting right above that area, but you can see volume's just been declining as the market has been rising. And over here, we sort of had the same thing: volume declining and market rising. So, and as that happened, that sort of led to a sell-off right after that. And we had the big fall, of course, late July. And that's probably going to come, if we do have that big fall this year, then that's probably going to come right around September, when they see how the Supreme Court rules over in Germany on the constitutionality of the European bond. And then they're also, we got the Fed funds rate. And, I mean, there's just a whole slew of indicators come out. And, of course, the big news out this weekend is Mitt Romney chose his running mate, being Paul Ryan. So that way he can basically try to define his fiscal plan, which is to cut taxes, reduce regulation, and also cut down on all social programs. So it's going to be interesting to see how that goes, because I mean, that's, in a lot of ways, that's obviously a very good thing for the market, but at the same time, it's going to cause, let's just say it all does all get passed, that's going to be less spending, which allows the market to actually become more of a free enterprise market again, which is a good move. But it'll be a painful time, because it'll also mean government's not infusing money, and therefore the market is going to drop until it figures out, okay, things are real, we can move forward, and we can be solid, and then it'll be ready for a steady, long climb, so long as the EU doesn't fall apart. But anyway, so it's going to be interesting to see how that all plays out. And I was reading up on him and seeing what kind of guy he is, and I've kept up on all the candidates a little bit, but just seeing candidate, not necessarily pro for, just talking about who he is, and definitely a fiscal conservative, obviously. And has a very conservative plan, has been pushing this agenda for quite a while, been in Congress for, I want to say almost 12 years now. And is also, he's known for sleeping on his cot instead of charging his taxpayers, money for, expensive and lavish hotels. And so, it's going to be an interesting race. We'll see if both of the candidates come out and, obviously the Republican side is going to be really pushing the economic battle. We'll see if the Obama-Biden camp decides to reply or not. I'm really looking forward to seeing Biden and Ryan in a one-on-one competition there in a debate. So I think Ryan's going to spank him a little bit, because he's just so hardcore and quotes all the facts like crazy. But, whoever you're for, whatever. But, I'm definitely, obviously, for as little taxes as possible. So, anyways, back to the markets and checking them out. So we got the S&P. And it looks like it may be wanting to do a rebound here. If we go back and we look at, how strong of a rebound, well, we always want to be looking at those standard deviation numbers and see if it has pulled back that full standard deviation. Looks like we have a 10-point standard deviation from Friday's close. And let's see, that would have put us, right here. And that puts us at the close. Let's go ahead and pull up the ES. We're looking right at the futures market and zoom in on that. And so we'll see that we got the close right there around 1402. And that'll put us down at about 1392. So we got pretty close. We got to 1394. So it basically pushed on that standard deviation level. It got really close to it. It backed off. And anytime you see it getting 70, 80% close to that standard deviation, it should not be a surprise to you to see it back off from that level. It may come back down and bounce to it. And then the most bounce you should expect is really a 1 standard deviation level back up, maybe a half standard deviation level back up. So having a 10-point standard deviation level and having a low today, right now we're looking at a low of 1394.25. So that basically means that we're looking at a bounce to about 1399.25. And if we look at what was the high over here, we got a high of 1398.25. So about a point off on that. So we're operating at, it looks like about 70, 80% of standard deviation levels right now. And not only to the down move, but then also to the retracement. And even if we go over here and look at this side, we look at the close here of 1402. I mean, we barely had any move up at all. I mean, it pulled down, moved up, came back down. And this area right here, you can see it as a solid support resistance level throughout the night. And that's sort of basically where it lost its steam just now. So it'll be interesting to see just how the markets do play themselves out. But moving down right now on lower volume, and we'll see if they continue. If we go over and we check out the oil markets, then we can sort of see how oil's been moving, all this threat of war and everything else, and so just sort of keeping it, sustained in this area. But had a big move down, so it could have been a great trade to hop into, just depending upon, which side you were on, I guess, right? And, you could have been on the shorts. If you're on both sides, short side first, long side second, that would have worked out pretty well for you. But, no matter how you're trading, you definitely want to trade with limited risk. If you have any questions, I want to make sure you know the number to give us a call. And don't forget, you can also listen to us on your mobile phone at tfnn.mobi. But you can give us a call at 877-927-6648. Again, that's 877-927-6648. And as always, we like to talk about several markets. One of those markets being oil, one of those being the S&P. We like to call out some trades if we see anything that looks good. And we'll also look at some potential Nadex setups, because that's one of the big things that I'm always out and about. Because the big thing about Nadex is it actually allows you to go in and limit your risk and basically define your stops without getting stopped out. So basically you have a stop loss without having a stop trade. And so we'll talk about that here a little bit more in just a second. But to wrap up on standard deviation levels here for oil, it looks like if I pull up my little chart and my calculators and put it all together, we got, let's see, standard deviation level of as much as $1.41 from the close. So a pretty big standard deviation level in oil right there, but not too out of the norm. And we already had some pretty big moves on that. If we look at the close on Friday, then what we'll see here is we had a close of 93.39. So if I go and I plug that in, I go, okay, well, if we had a close of 93.39 based on standard deviation, this is not your typical standard deviation. Again, this is standard deviation including implied volatility, which is how far the market expects something to actually move. And standard deviation level pushed down to 91.98 is how far the market said the market should go down. And if we go down and we look at the lows of the day, then we can see right here that we have, let's see, 92.05, and go over here just to check this one out, make sure. Yep, 92.05. So combining those two together, then we can see that we were literally within 7 cents of the one standard deviation move down before it decided to do a run back up. So not a big surprise there. And if we take that and we add that $1.41 standard deviation move, and make sure you're using those numbers today in your trading, and we go, okay, well, so what do we have over here? Again, we had a low of 92.05. If we go into 92.05 plus 1.41, then it looks like a rally back up to 93.46. It should be the expected rally. And let's see, we got a high of 93.51. So literally just 5 cents away. So standard deviation money pretty much on the mark right there. And one of the big plays that you can really use on these, if you want to use them to fade the market. Now, I like to use them also to take profits. So let's say you are short and it's going down, it's moving down there. That's where you're going to want to be tightening your stops, maybe taking off some of your profits. If you can grab a full standard deviation in a day, that's a great move to have. But no matter what, definitely be tightening it when it gets about 70 to 80% closer to that. That's where you might want to use a 1 or 2 bar back trailing stop. When you come back, we're going to pull up Nadex, and we're going to look at some potential plays and how you could have played this and how you can play it going forward. So stay right there, folks. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. Give us a call if you have any questions, 877-927-6648. Again, that's 877-927-6648. And a quick market wrap. We got the S&P down 5.5. We got the Russell down 6.6. We got the NASDAQ down 3.5. And we got the Dow down 72. Gold is down 8 points now on the day. And we got oil up actually 26. So depending upon which oil contract you're looking at, probably want to be looking at the September contract, being the active contract for the month there. And if we go over and we look at natural gas, it's basically flat up, or down right now 0.02. And basically all the currency is still the same from the last break. So not much movement there. And if you haven't already, make sure you hop over to TFNN.com. And right here on the right side, right on the front page there, you're going to see a banner that says Nadex. Click on that Nadex banner, and you can click Create Account, and you can get a free trial account by clicking Open a Demo. You can actually fund an account with only $100 in it. You can day trade with only $100, unlike stocks where you use $25,000 or more minimum daily balance in your account. Then $100 to fund it, no minimum balance required after that. And, of course, obviously I suggest people when they're actually going to trade, they're putting $1,000, $2,000 in. But, if you're just getting started, you want to put $100 in there. But want to test drive, open a demo account, and it literally takes 15 seconds. So you can put in your username, first name, last name, phone number, and email address. Click Apply for Demo. They will instantly send you the password. If there's an O in the password, it's a 0. All right? Once you get that password, then click over here to log in, enter your username, enter your password, and click Log In, and you'll be able to get immediate access to Nadex. And then once you're in Nadex, you can hop in here, and basically this is what you're going to see. And you can go in and it'll actually be right here on Master Spreads to begin with. And you'll see there's bull spreads and there's binaries. We talk about both during this show. And my favorite being bull spreads because it basically gives you the opportunity to trade the market like you're trading the underlying market, but without the unlimited, uncapped risk really that you have in the market. So if we go over and we're checking out, let's say we're looking at oil right now, we want to go to commodities bull spreads, we want to check on crude oil. Then now we have several options that we can look at to find ones that are close. So what we're going to do is we're going to go, okay, where's oil at right now? Oil is at 93.07. Again, that's the September contract. And notice right here, what they're going to do is they're going to tell you what month the future contract is following. Now, the Forex, they follow the spot market, all right? So you don't have to worry about months on that. But if you're trading the futures, you want to make sure you're following the correct month. So don't be and also make sure you're looking at the futures. Don't be looking at the SPX or the spiders because they're going to be different in their price. And so they won't be a lot different, but they will definitely be different. And they'll usually that difference will usually be pretty consistent. But if we go over here and let's see here, what I'll do is I'll pull this up. I'll just sort of show you what happens if you put them all together there. And we do that. So if I go over here and I put in SPX, and then I put in SPY, and then we'll go ahead and we'll add in ES, and we'll bring that down to a 5-minute bar there. And then let's look at the current day. Basically, you're going to see that the SPX is trading at 1400.26, the SPY is 140.33, and the S&P futures September contract is trading at 1397.25. So looking at that could give you throw all your numbers off. So make sure you're just looking at the right number. And just in case you don't have access to futures data, then one of the things that I recommend people to do, now obviously I do recommend that you get access to futures data, futures broker, and you can always email me if you have any questions about that at dmartin@tfnn.com. But if you hop over here and, like I said, you have any questions, let me know. But you can go into what's called the master spread. This gives the widest spread on the market. So let's just say we're looking at oil. We go over to oil right here, that $1,000 wide spread. And we go in and we click on the chart button. That's going to open up a chart on oil. So, now we'll come back down. We'll just look at one chart on oil. And I'll show you how it lines up. So we see right here, we got oil, it's literally 93.10, quoting at 93.10. So basically a very good replacement chart. If you don't have futures charts, it's a good thing to get you started, get you going, and you can use that as your chart for the underlying market. Okay, again, that's called the master spread. You can take advantage of that. So now that you figured out what it is, and let's say, looking at oil, we see, hey, it came up here, came within 5 cents. It like came in with a few cents of the low, came with a few cents of the high over here. Of the standard deviation level, and let's just say we think that oil is about to move back down because it's bounced off that standard deviation level. Then what we can do is we can now we want to find one that's as close to $93 as possible, and so we're going to go to look at H230. We got a 94, so that's pretty close. So we can pull that one up as a potential possibility, and then we go over here and we look at the 500s, and we can see we got a 93, and so we can choose between these two. Really, it's probably our best options, and then we could also look at just one more. There is a 93.25. That one's going to be even a little bit closer, but it gives us till 2 o'clock. The other gives us till 2:30. So we come back, we'll look at those 3 different trades and figure out which one might be the best one if you want to go short oil right now. Stay right there, folks. We'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back to Diagnostic Trading here. We're checking out a potential oil trade setup, and then we're going to go take a look at gold because it is just flying down. And to sort of see if there's anything that you can do to possibly still take advantage of the move that is taking place. So right here on oil, let's say, again, you're looking at going short on oil right now. It's sort of filled out that standard deviation move, and you're trying to figure out what you think may be the best trade, looking at the September futures contract there. So looking at all the possibilities and looking at some, volatility is picking up too, because I can see that inside the premium there. Obviously, if we look over at the one that expires at 230, then that's going to give us a lot of risk because the ceiling's all the way up at 94. So we're going to cross that one out. And now we're going to check out the two. One expires at 230, one expires at 2. And this one gives us pretty low risk, $23, but it does have to move down to 78 cents before we profit. This one is right here at 92.92, so really not a big move that it's going to have to make. I definitely would take this trade over this one. And gives us a little bit of time, gives us about an hour and a half to make the trade toward the oil pit markets there. And also, gives us, a decent risk reward on the trade with a potential of making up to 117. Our expectation, of course, is not to make that much. Our expectation is that it'll probably come down to around 92.20 on the day if it does decide to go ahead and continue that decline. So we're going to go ahead and hop in on that trade. Trade risk has increased a little bit in between the commercial breaks, but I just want to go ahead and keep it live for you. So we got 92.89. We're looking at 10 contracts. That's a risk of $360. That's basically like risking putting a 36-cent stop loss in on oil, which is not a hard thing at all. You can see how fast I got filled on that. Not a hard thing at all to get hit. 36 cents. Oil can obviously move up and down. It's been moving up and down about $1.40, $1.50 today already. So, you definitely want to use some wise choices if you are using stop losses. And the stop losses I like to use are Nadex, because it's my stop loss, again, without being my stop trade. And so what happens on this trade is if oil goes higher than 93.25, my risks are capped at that initial risk that we put on right there. And again, if you want to check that out, I'll show you exactly what that looked like. We put the sell in. We go, okay, what price did we get filled at? And we'll go over here and we'll put in, we got filled at 92.89. So getting filled at 92.89, that puts our risk in at $360. Okay? So no matter how high oil goes, we can't lose more than the 360. Again, that's only a small 36 cent move in the oil futures market when you're trading oil futures. So, but no matter how high it goes, if it goes up to 93, 93.50, 94, our risk will not increase past 360. And as long as it gets anywhere below 92.80, let's see where we got in at. We got 92.89. Then we are looking at a profit on this trade. So anything below 92.89. So we'll keep that right there so we can check it out. And then we're going to go over and we're going to take a little peek at the gold market and see what's going on. So looks like our oil trade is moving down, which is great. Let's go ahead and check out gold. And just in case you want to make sure you were following along there, that was the 91.75 to 93.25 spread. We're selling that when we sold 10 of them. They expire at 2 o'clock Eastern time. Okay, again, 91.75 to 93.25, expiring at 2 o'clock on oil. So if we go over here and we check out gold, and we'll zoom in a little bit. Also, we want to make sure when we're looking at the gold futures, we look at any futures. Let's pull it up in Nadex, and we'll follow along and find out what the best trades are going to be. And so on the gold market, just to check that out, you know, if you're following along on Nadex, the pips ought to be closing any second now, if not already. But you can still be seeing what's available there. And I want to look at the standard deviation levels for you, for those who might have caught that trade, to know, hey, should you be looking to possibly pull some profits? So with pulling that up, I'm looking at a standard deviation of, let's see, $7.86 being a 1 standard deviation move. Looks like we're probably going to be definitely blowing that out. So let's go ahead and check out a 2 standard deviation move. And that would put us down, let's see here, $15.40 from yesterday's close. So if we back up out to the daily charts, we pull it over, we look over at yesterday's close, yesterday being Friday. We always want to look at Friday's close. I know we have stuff going on, of course, on Sunday, but the Friday close is the number you want to use on a Monday. And so we're looking at 16.23.10. So at 16.23.10, then what does that give us? Well, let's pull it up and check it out. So 16.23.10 minus 15.4 gives us a move down to about 1607.7. Well, let's see how far we moved down on this trade so far. So we got down so far, we got down to about 1609.8. So it could have a couple more points down. And so just be aware of that there is a little bit of room. But we have definitely filled up that 70 to 80% of standard deviation level. And again, that's a 2 standard deviation move. So now for a 1 standard deviation move onto the upside, if you were going to fade this play, how high of a play would you be looking at? So checking that out on the low there at 1609.7 so far. And then adding in a 1 standard deviation. A 1 standard deviation on gold right now is 786. So plus 7.86 is going to put us right around 17.56. So for as far as looking back for a pullback, then we're probably looking somewhere around the 17.50 area. And again, looks like most of the market is operating on about a 70 to 80% of everything today. So it could easily be about 16.16, and then it hesitates at that point. If we do get a move down, then like I said, we do have a couple more points down to 1607.7 for a full move, but every number we put up so far has shown that all the markets are operating on, like I said, about 70 to 80% of standard deviation. But that was definitely a big drop in gold, and to any of you traders out there that caught that trade and went short on that, congratulations. That was a nice big trade, 10 points, $1,000 move in gold, literally in just, the last 40 minutes. So not too shabby. But again, you can use all different markets. You can use Nadex to trade gold. And now the Nadex is going to mirror the pit hours on the gold. So right now the Nadex markets will be closed, and you wouldn't be able to hop in, but they were open just a little bit ago. So also we got natural gas, so that obviously being a mover, we can check that out and see how natural gas is moving. So if we go to natural gas, You see we're just getting some oscillation, but definitely some volatile oscillation, just depending upon how you want to look at it. But I mean, you got, literally 50 basically 0.050 up and down like crazy going on today. And so some fun plays there. And going over and checking out the currencies, looking at euro dollar, and euro dollar just running up like crazy after pulled down overnight. And basically we saw this move right here. Got Friday, and then a little drop down, and then it decided just to take off and pull back. So what would the pullback level on that be? That'll be the next thing we're going to pull up here, so we can know what, if you are short on euro dollar right now, then where should you be looking to take some profit. So let's go ahead and pull up euro dollar. Now when I'm pulling this up, I'm usually going to be looking, now you could pull the euro dollar spot market. I'm usually looking at the euro dollar futures. It's just easier to get implied volatility info data off them in order to calculate your standard deviation levels. And on that, let's see here, we are looking at a standard deviation on the currency for 1 day. Let's see, 1.2394 minus 1.2 of about 59 ticks. So looks like we're definitely blowing that out of the water. So we might go ahead and add in another standard deviation level. And when that does happen, so it doesn't happen often, but when it happens, we definitely want to be, ready for it. And so we got 1, we got 2, and we got, I'm even going to put in a third one over here, so that way we can calculate them all. So we got a 59 pip from Friday standard deviation level. We got a, let's see here, 1.2453 minus 1.2336. We got a 139 pip. 2 standard deviation level move. And if you just for kicks, we're going to go ahead and pull up a 3 standard deviation level move. And on that, we got, let's see here, 1.2336. That's big. Let's check that out one more time. So just 156 pips. Actually, not that big of a difference. They're not expecting a full standard deviation in the options market, but I do want to double and triple check. Yep. So third standard deviation is definitely tightening down right there. I see only 155 ticks. So let's go ahead and pull that up now, and let's look at the euro dollar. Let's see how it's been moving, how it's been reacting compared to yesterday's close. So if I go over and I look at yesterday's close, again, yesterday being Friday, then what I'm going to see is that we had a close of 1.2287. So I can pull that up over here, and then I can zoom back in. And we'll just throw that number up on the screen. So 1.2287. And then we got our 1, our 2, and our 3 standard deviation move. So let's go ahead and see, what was a move up on that. So 1.2287 plus 0.0059. I think that's a move up to 1.2346. So right around here, and you can see that actually became a bit of a support resistance level. And then, of course, as we know, it broke above that. And so if we add that to the close of yesterday, then we can see that that had been up to 24.26. Didn't even go that far. So we may even look at 1.5. So the way I do that is I do 0.0139 times 1.5. Okay, and that gives me 2, or actually that's a little bit big. So 0.0139 times. Actually, what we'll do is we'll do 1.5 standard deviation. So we'll do 0.0059 times 1.5. That puts us up at 88 ticks above the high for the close of yesterday. So 1.2287 plus 88 ticks, or pips, I guess. 88 pips, 1.2375, and we actually did just touch on that. So let me get this out of the way. We can see exactly what the high was. So I can hit an exact 1.5 standard deviation move, and that exact high was 1.2372. So it is 3 ticks off of 1.5 standard deviation. So usually looking, for 1 to 2, or half or 1.5. Basically, you're looking at half increments. And so seeing that, we had a 1.2322. And then taking that off as the high, and then taking off the standard deviation move back down. Then we could, let's see, get a move back down to 1.2263 is actually a big move back down. So let me get that number just to make sure we have that one right there. at one point. That's why I was like, that number seems a bit off. All right. Puts us down to 1.2313. So as basically the full standard deviation move back. So it put us about right back here, which again was a support resistance level. So we saw both of those areas where the standard deviation move did show a support and resistance level. So it hit this area, oscillated back and forth for about an hour, hour and a half, finally broke it, came back up here, and then it just bounced off, and finally broke down below it. So just make sure you are keeping track of those numbers, those levels. You can do it in a lot of different ways. We're going to be adding a tool to the website to help you out with that, make it even faster, make it easier, make it live. But you can use the Thinkorswim to help you out with that as well. And, it's one of those things. You need a way to help you take your profits. Whenever you're trading Nadex and you're trading anything, Nadex, the nice thing is it helps you manage your risk, but you need to manage your profits. And standard deviation levels are very good for that. They're also very good for figuring out reversal zones. So anytime you see that 1 or 2 standard deviation level, that's a good area that if you are wanting to go reversal and you have a really low risk trade set up, you can use it to take advantage there. And so we got that one down, and let's see, with some other markets we got that are moving, that are flying. We have soybeans going, and so let's pull up soybeans. Let's check that out, see how we could use that to our advantage. And obviously it had that big drop early in the morning, but then after that it sort of oscillated around, and then it moved back down, pushed a little bit lower. And so just to test out this whole standard deviation concept and idea, let's just see how it played out. And we'll go over and we'll add in a couple slices over here. And that way you'll be able to calculate and see for yourself what was the standard deviation level in a 1 or 2 or 3 standard deviation move on soybeans. So we've got a little bit of rain in a couple different areas. Not enough to make a big difference. But I know here in Dallas-Fort Worth, Texas, we had a lot of wind. So knocked down some fences and stuff. But 70 mile an hour, so some pretty strong winds. But we need a lot more than wind. We need a lot more than a little bit of rain. We need a lot of rain to really get things going in the right direction for the farmers and the food and everything else out there. But we pull that up and we're checking it out. Then what we can see is that we had a standard deviation level of, let's add a day in so we get a full day's move expectation. We got 1630.25 minus 1606.5. Okay, so that's giving us a 23-point standard deviation move. And if we're looking at yesterday's close, okay, then what we got is yesterday's close was right at 1644.5. So back on down to 5-minute charts, and we'll be able to pull that up. And it'll show you 1644.5 minus 23.75. Gives us a move down to about 1620.75. So it definitely used that as a resistance level in the overnight trading session, and then it just busted through it early this morning, pretty much right there on the big trading hours there that started around 7:30. When it knocked through that, then it went a little bit further. I'd probably say about a half standard deviation, probably just like the euro dollar did. So a lot of things are moving in 1.5 standard deviation levels, or 70 to 80% standard deviation levels today. And so if we go in and pull that up, we got a full second standard deviation. And we can see, how did it add up for us? Could we have used it? And you'll see 47 points down off of yesterday's low. So basically just another 23 points. So, and obviously it did not move a full another 23 points, but it came pretty close. So if we knock 23 off that, we're getting 1597. It came right down to 1600. So you would have been ready for a good reversal point at that point, or at least to take profit, because you'd have been knowing you're getting close to that second standard deviation. So just wanted to focus on that a little bit today for you. Put a trade on oil. We'll check that out when we come back from the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain explain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back to the Diagnostic Trading Hour here. And just doing a wrap-up on the market for today. And we got a lot of things going on, but right now oil has been doing a pullback. We'll see where it ends up. It's basically just oscillating right around where we got in. It's been up and down about 5 cents. And we're short on it right now, so we'll see if that short keeps up. If it doesn't, we have a tight stop, basically a 35-cent stop loss. And but again, not a stop trade because using Nadex there. So we'll see how that ends up here in the next hour. And you got the soybeans sort of chilling out a little bit now after their big move down off of the highs on Friday. And if we go over, we'll just walk through each one of the charts. And we can see corn definitely made that big move up and then pulled down a lot. So, I mean, you're talking a massive move from 849 all the way down to 789. And so just a big move down. But again, checking that big move isn't big compared to just what's been happening in the sense, I mean, obviously the bars were huge, but the levels are not necessarily key at this exact moment. So we're going to see if that continues. If it does, and if we get some rain, which would be great, for the farmers out there, if we get some rain, then we could definitely, and also be great for the traders, then we could have some great shorts going on over on corn. But right now, I'd be definitely watching it day by day. Check it out. And if you want to play some trades, make sure you do check out the Nadex binaries. So even when other markets are closed, you can go in and you can look at the binaries. And sometimes if you want to take a little bit of a longer position, you're like, you know what, I think the corn is definitely going to fly up or fly down at this level right here. Then you can hop over, and you don't necessarily just have to trade the dailies. You can literally hop over and trade at the weeklies. So it doesn't have to be a 2-hour, 8-hour trade. It can be, a long trade starting as early as 3 a.m. on Monday and then going all the way through Friday. And so you can hop on here and see what trades may afford you some good opportunity. If you think there's a good chance that corn could keep falling, sort of a defined risk way where you can sleep at night because you don't have to worry about stop limit days or any counts getting blown out, nothing like that, then you could go over, and let's just say you thought it was going to drop down here to 17, 750 maybe by the end of the week because you think it's just a beginning of a move down. Well, then you can go over here and you got this trade you can put on, weekly trade where you can go short on corn. You can put in 10 contracts with $165 risk for $835 profit, and put that trade in, and now you're actually short corn. If it does close below 765, or even if it moves down a bit more, then you can have a decent trade in your account. So right there, and again, you get to try it out on a demo account, so you can sort of see how things work and how things look, and just sort of get used to the entire platform. And that's one of the things is people tell me about what they have or haven't made or whatever in their account, and I'm like, make sure you're always figuring out how to make it in your demo account first. If you can't do it in demo, you're definitely not going to do it in live. Just because you can't do it in demo doesn't mean you're going to do it in live. But if you can't do it in demo, at least you know how to hit the buttons correctly in the live account. And the cheapest education you're ever going to get is a demo account. It will cost you some time. It will cost you some patience. And there's nothing like making $1,000 in a demo account and not seeing it in a live account at the same time. There's nothing like losing $1,000 in a demo account and not seeing it in a live account. And one of my favorite phrases one of my mentors taught me was that I always wish I have something I don't, and have something I wish I didn't. And that really comes back down to demo accounts and learning how to trade things correctly. And then once you got the hang of it, once you got the mechanics down, then starting to put the real money on the table. And but just make sure you're not hitting the wrong buttons the wrong direction. You do understand how the products work. And if you have any questions about those, you can always give us a call. And I'm available by email, by phone, 877-927-6648, or dmartin@tfnn.com. And let's do a quick market wrap before we close up for the day. And just check out where everything is looking like it's at. We got the S&P still down 5 points. We got the Russell down 4.2. We have the NASDAQ looks like down 2.25. The Dow down 68. Oil now is just up 10 to 12 cents on the close of yesterday, so we got that short oil trade in. We got corn down 11, soybeans down 36, and gold down 10 with the currency still sitting about flat from where we were at the beginning of the show. Have a great day, and I will see you tomorrow. Same time, 12 to 1 Central, 1 to 2 Eastern on tfnn.mobi or tfnn.com.